Hey traders, I wanted to do another video on swing trading, and this one has clearer 65-minute and 195-minute graphs, but it's going to have the same original content. And I want to place special emphasis on the exponential moving average and simple moving average lines for you guys. And then I'm also going to draw out major support and resistance using the daily chart. And you're going to be surprised at how easy it is using old data, not new data. And I'll prove that. Okay, so let's get right into it. Now, this is TQQQ for NASDAQ. As you guys know, I like to trade the NASDAQ triple leveraged QQQ. Okay. On the left-hand side is the 65-minute chart. On the right-hand side is the 195-minute chart. And I don't want to go any more granular than that, meaning I don't want to go into the 5-minute or even the 30-minute because I think the 65-minute and the 195-minute is adequate for swing trading purposes. You can even go daily, but that's a little bit too high level. And um, so I'm going to on the left-hand side here. Let's just jump right into it using the scenarios. Okay. Now, if you've been following my videos, you know that the exponential moving average, EMA, is the red line here. Simple moving average is the gray line, okay? EMA 50, SMA 20, okay? You're going to find that time and time and time again, the most critical line that triggers a trend reversal or trend change from low to high or high to low is the EMA 50 red line time and time and time again. And you'll see this over and over and over again until it's beat into your heads, okay? So let's start with the 65-minute time frame, and this is back in September because this is as far back as I can go. Right here, see that there's a gap there. That means it stops for me on the 65-minute time frame on my trading platform. So I went back as far as I could. So as you see here, it's coming down, right? It's coming down. It tries to come up over, this is September 28th, it tries to come up over the EMA 50. And as you hear me always say in my previous videos, wait, 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 wait for the back test. Wait for the back test. That always tells you this is the back test portion. This always tells you whether it's going to bounce off of the EMA 50 and keep going up, or going to fail the EMA 50 and keep going down. And as in previous videos, you guys remember me always saying the candle body, not including the wicks, you're excluding the wicks, the body must close a full candle body must close above the EMA 50 in order to continue the trend upward or have a trend change upward, right? That is the key. Okay, so I've always said that in my other videos, and I'm saying it again. It's absolutely critical. So in this case, you see here, it does come up past the EMA 50, but what happens? It fails on the back test down, and look at the candle bodies closing, straddling the EMA 50. You've heard me say that before. When it straddles the EMA 50, that's lights out, guys. It's gonna fail. Okay, and that's what happened. Boom, it fails. So that confirms for you that we are not about to have a trend reversal. So this is 928. Let's look at, okay, here's 928. Here's 928 on the 195-minute side on the right-hand side here. See that? Notice that on the 195-minute, it didn't even get to the red line. It's the the 195-minute simple moving average SMA line is equivalent to the 65-minute EMA 50 line. You will see that correlation a lot. Okay? You'll see that correlation a lot. So in this case, okay, if you have to rank or prioritize the two, EMA 50 is always number one, period, hands down. Period, hands down. Number two is the SMA 20 line. Okay? It I've seen like so many times it clears the SMA 20 like right here, clears it. You know, I would even say that's a bad signal that it's kind of straddling the SMA 20 line right here. But it clears it, comes back down. comes down, clears it, comes up, but it cannot clear the EMA 50. Okay, so uh, back to this. Now, see that? So on the 195 minute, it can't even clear. It doesn't even it doesn't even reach the EMA 50 on the 195 minute. That is a red flag. It's like, oh no, this is not a trend change. Even though on this day markets surge, it is a clear surge, right? Huge update. You're like, oh, we're gonna have a trend reversal. It's time. Nope, it is not meant to be, right? Okay, so also, as you guys know from my previous videos, I'm huge on the MACD. Look, let's go look at the 195 minute 928 date right here. Look at where it is, where's the MACD is relative to the zero line right here. Well below zero. It is in negative territory. Although it is coming up, okay, it is coming up, it's in negative territory. And this is actually a critical point. Because it is in negative territory, see that? Well below the zero line. But it is trending up. That's what the MACD's job is to do. The MACD's job is to come up, 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 down, 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 up, 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 because its job is to get back to the zero line at all costs. But what I want to point out here is, so it is coming up on 928 right here, but we know that it is going to come up and it is going to come back down. See that? Making newer lows. It's making newer lows because it is below the zero line. That is the key. I want to emphasize that and say that again. Anytime, especially on the larger time frames like the 195 minute, the MACD overall, when both the MACD line and the signal line are below the zero line, that means any downturn back down on the MACD like this right here, like this, any downturn back down is a lower low. That is key right here. See that? That is a lower low. You surged up, but you made a lower low because you're below the zero line. That is key to understanding this. However, you are making lower lows, yes, because you're under the zero line. However, on the MACD, you are making higher lows here and here. Or let's just take this point, or right around here. This is clearly, this point is clearly higher than the starting point, okay? Right? We can all agree to that. Even though this point is lower than the starting point back here. This is what you call bullish divergence, guys. We are about to have a trend reversal. We're about to have a trend reversal. So essentially, you can actually look at the MACD alone and say, ah, that is a higher low than that. So that means the next leg up could be the bottom. This leg right here could mark the bottom. Could and see. Okay, here we go. I'll get to that point in just a few moments. But see, look, is this the bottom? We're gonna find out. I'll scale the chart over to the right a little bit so we can end the suspense. But see, look at that. When I said this could be the bottom, the next move up could be the trend reversal, and the next move up so far, guess what? Over the EMA 50 line. See that? The bar is clearing it, and here's the back test. So here's the original bar that breaks out, the breakout bar, and now the back test must clear candle bodies, the bodies over the EMA 50 line on the 195 minute. If it clears it on the 195 minutes, 150%, it's going to clear it on the 65 minute, okay? 100%. On the 65 minute, in fact, it'll look like it's way above its EMA 50 line, like up in the sky, okay? So, so that's what I wanted to emphasize, that point. The MACD, higher low, and where it is relative to underneath the zero line, okay? If that's not clear, please ask me questions in the comments. You know, I'll more than happy to clarify or do another video that emphasizes that. Okay, but that is critically important. Okay, so Um, anyways, to go back to my original point, that it on the 65 minute it looks like it surged, and on the 195 minute it looks like it surged. But look at it relative to its EMA 50. See that? It's like, no, you're below your EMA 50 still, and you didn't clear the back test. You did not pass on the back test on the EMA 50. Okay. And while the 65-minute MACD is over the zero line, the 195 is not. It is not. And in fact, I just want to also say one more point on the MACD. Like, okay, this is going up, 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 down, 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 making a higher low. You will find that over and over and over and over again, regardless of what security you're talking about. Apple, Google, Microsoft, whatever, right? Lululemon, whatever. Okay? So if you look for this, like especially on this big 195-minute time frame, that it's the fact that it's under the zero line means okay, it is trying to get back, but it is going to back test and make a higher low. So that's how you just can almost anticipate at a gross level. No, you're not done. You're not done going down. You're not done going down until I see a divergence, until I see a bullish divergence between this low being higher than that low on the MACD, but this low being lower than that low on the price. Until I see that bullish divergence, that's how I know we're not at the bottom yet. Okay, that's actually probably to summarize this whole session. Um, that's how you. That's how I recommend that you look at the patterns. Okay. All right. Let's kind of move on to another time frame, shall we? Let's do that. Okay. Okay. Here we go. This was the a moment ago. That's what I said. Oh, we have bullish divergence here. This would have been the higher low, right? This was a few moments ago. And look what happened. Boom, 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 boom. Back test, successful. Up, back test successful. Up, back test not successful. See that? Not successful right here. The moment that candle body straddles the EMA 50, that is curtains, my friends. But how many days of swing would you have had you caught it here on this day, 928? Was this 928? 10-3, I'm sorry. 10-3. Let's see. Yeah, 10-3. Okay, yeah, no, 928 was that failed backtest. That's the date I was thinking of. 10-3. So 10-3 all the way, let's say, 1, 2, 3, 4 days, 4 swing days. Okay, there's your swing trade. Now, okay, just looking at just the on the 195 minutes, the bodies are clearly over the EMA 50 line, right? And the bodies are not straddling. They're touching. They are touching. I'll give you that right here, right here, right here. They're touching the EMA 50, but they're not straddling the EMA 50 until here. Okay. Now, so obviously you'll see the same thing on the 65 minute, right? If the 195 minute is showing uh, clean breaks above the EMA 50. Oh, 100%. Look at that. Way above the EMA 50. Oh, this is an interesting look here. Oh, that's an interesting look. That's what this big wick is right here. So this big wick, if you're looking at both at the same time, shows you buying buying pressure back up, meaning they're not quite ready to die on this hill just yet. Okay, but this should probably, ooh, yeah, I mean, if you're patient, okay, this failed, but this comes back up, and this comes back up and fails. I'm sorry, succeeds, passes. I don't even call this a back test yet. This is just going up, 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 up. So, you know, it still has power. Now, however, now check this out. You're starting to see, even though it's passing, you're starting to see bearish divergence on the MACD on the 65 minute. See that? See that? It's going down, 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 down until it collapses. So start being cautious, even though prices are clearly going up, right? We're making higher right here. That's that wick, that big tall wick, that's high. That's another high, but MACD is not making new highs. Okay? Same with the RSI. Look at the RSI. It's starting to collapse. That's when you need to start thinking about getting out. Okay? This is the 65 minute. 195 minute. Very somewhat similar. It's the MACD seems strong, but the look at the RSI, bearish. See that? Bearish. So now you have RSI on the 195 minute bearish, RSI on the 65 minute bearish, RSI on the MACD on the 65 minute bearish. If you want to count these as four, 1, 2, 3, 4 indicators, 3 out of 4 is saying bearish. Start thinking about getting out. Is where I'm going with that. Okay. So, um, so yeah. No, this is a good example of bearish divergence. Whereas earlier, prior to this huge upswing, was bullish divergence when it's trying to bottom. Right? You saw that earlier. Okay. So yeah, these are good examples to go through. Okay. And so as you see, even though it's just collapsing, collapsing, collapsing after the bearish divergence, right? Even though you see it's making lower lows, you see once again the MACD, as it's naturally going to do, try to go higher and higher and higher and higher and higher. Okay, and this is natural. This is what the MACD's job is. It's got to try to get back to the zero line in order to have any attempt at bottoming out. Right, create that bullish divergence that you saw earlier. It's got to. It's going to come up. See, look at this. Look at the 195 minute. Holy smacks! It made so you had a huge surge, right? This is like the market makers fake out, right? This is the market makers trying to get the bulls back, set a bull trap. Yeah, setting a bull trap. You had a huge surge going up on the 195 minute, only to make even lower lows on the MACD than when you entered the surge. See that? This point is higher than that point, so you made even lower lows on the MACD. That's even worse. That That is telling you that at a macro level, we have more to fall. You see what I mean? It's like, no, we got more to fall, guys. We're not making higher lows necessarily. So, okay. So let's move to the next time frame. Keep this discussion going. Okay. Oh, yes, my favorite date. Okay. All right. Let me Yeah, this is 1013. This is 1013. 1013 right here. 1013 right here. That was the day. I've said this a million times in previous videos. That was the day the CPI came out for the month of September, right? It's always in arrears, even though it's on 1013. Dow dropped 500 points, only to, you know, close at plus 800 something. So close to a 1500 point swing. Now, let me rewind just a little bit so you can see better. Okay, here we go. Here we go. Here's the great, here we go. The great collapse that you saw a few moments earlier. Down, 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 down. But the MACD is going up, 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 up. Okay, on the 65 minute. Now, on the 195 minute, down, 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 trying to come up a little bit, but it's still well below zero. Okay, look at, I mean, honestly, when you're this far below zero and you're trying to come back up, you this is a good example. You have it's trying to get back to zero. It's close to zero. I've said in previous videos that the market has already decided it's going to rally. Okay, It has. Before the CPI came out, it had already decided it's going to rally. I have other videos that prove this. You're gonna have to watch it. Uh, but yeah, I prove it. There's a trend line that it already set. I don't have it drawn out here, but I will tell you it's set right here, and it's going like this, and it leads us to today, November 19th. Today, that trend line leads us to today. Okay, so it was predetermined is really ultimately what I'm trying to say. But anyways, let's get back to swing trading. So now, um, look at this. It's getting back to the zero line on the 65 minute, right? And despite a horrible, super hot CPI number, it surged back up. Because if you look at the MACD, what did it do? The MACD just went down like just a tick, right? Nothing like this. Like, whoa, way down. See what I mean? It because it went down just a tick. That means, oh, you're not far from zero still. Boom, it surged. Come back down. You know, you're still making higher lows relative to like way down here. Come back down. Boom, surge again. See what I mean? It's it's and look at the RSI up. Okay, so it went down from being that hot CPI number, but it went right back up again. And this right here, this is the following day. This is the next day. Down, 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 down. You're like, oh no, we're just gonna. There's no follow through. That's what was I remember at the time. There's no follow through here. But actually, when you read between the lines, well, actually, technically, this is a higher low than this. So although someone can make the argument there's no follow through, guess what happened after that higher low from this point? Boom. Is there really no follow through? So it was actually carving out a higher low. Okay, so um, see this? Okay, so let's skip over the 195-minute chart. Okay, down and then up, not quite making it to the EMA 50. Okay, fine. The next day it tries. It tried and it failed on the 195-minute. Tried, obviously failed on the back test, but made a higher low. Because of that higher low, and see, look, see that? This is 195-minute now. You were way down here before. So you surged. You actually, honestly, you needed the market, not you. The market needed that huge surge to the upside just to get back to the zero line or as close as possible, right? Only to fail on the back test, but make a higher low both on the price and on the MACD. That, my friends, is a higher low and marks a bottom. That marks the bottom of this huge downtrend. That's been going since August, right? I started since September because that's my data only goes back that far. But that's what happened, guys. This marks the end. You've heard me say in previous videos that notch, that's a notch right here on the MACD. Higher low notch. That's a bottom. That is a bottom. And we have not revisited, well, actually, we did about a week and a half ago. We did, we came close to this bottom, but now we are above the bottom. We've double bottomed, okay? In hindsight, we have double bottomed, but we are now higher than that, okay? So, so I hope that's helpful, going through these scenarios. It's okay, so see, check this out. On the 65-minute, comes up above the EMA 50, right? The most important one. Successful backtest so far. tries to go up again, fails the back test. So if you were being conservative about this as a swing trader, you could instead rely on the 195-minute and wait for it to successfully clear the EMA 50 on the 195-minute, clear the back test. Having said that though, if you asked earlier that I mentioned, if you can use as a very important general guideline, just wait for the MACD to go up because 100% it's going to come back down because it needs to create a higher low to declare a bottom. Notice I don't say declare the bottom because the bottom in my vernacular is the bottom of the stock market. That is the bottom. I don't think we are at the bottom yet. Okay, and I did a previous video on that a couple weeks back, and I'll show you the that splash screen in a few moments. So we are at a bottom. We are not at the bottom. Okay, so I hope that makes sense. I hope that's clear. See, if you look at this corresponding from the higher low juncture point, it comes up now. It easily clears the EMA 50 on the 195-minute chart. See that easily, and guess what? It's successfully back testing, coming back up. Oh, ooh, starting to falter a little bit. All right, starting to falter. But boy, if you note this higher low and look at the RSI, higher low on the RSI. See, the RSI is no longer just dumping all the way down to zero, or yeah, all the way down to zero. It's actually flattening out. Higher low. That could be your cue. Like, you know what? I think I'm gonna go ahead and get me some right now. See what I mean? It's definitely a critical indicator. Okay, so let's kind of keep going along, moving along. Okay, so this is interesting. This earlier, a few moments ago, and I said, oh, it passes, passes the back test, comes up again, but fails this. Now look at this. Okay, now look at this. This is a good scenario to discuss. Although it failed the EMA 50, it's hanging around. See, what it's doing is it clearly got rejected. So it's back testing, back testing, back testing. Now, now, as it's back testing, so it's going lower, 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 only to make another big high. Notice how the back test stays above the zero line for the last 2 days. See, you could say, well, it's staying above the zero. When it stays above the zero line, it means it will not crash. Okay, it's not gonna just collapse on you and go straight down like the flash crash. It's above the zero line. It stayed above the zero line right until extended hours on that day. Because this is what those gray vertical bars are. They're extended hours. Okay, so I forgot to mention, it's absolutely critical to add extended hours. It's absolutely essential. You got to do it because if you exclude that, your EMA and your SMA lines will not factor the extended hours data in, and it looks totally messed up. It looks your EMA and SMA lines are totally different, right? Totally different, and you have to include it because that is a bona fide part of the data set, right? So you have to include data from extended hours. Okay, so probably should have mentioned that in the beginning. But when you look at this back test here, look at that. This is a higher low than that, and that is still near the zero line. That means it still has legs for the next move up, right? That's key. That is critical. Whereas let's compare that to earlier. Look at this. This went well below the zero line, down, 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 down. And what were you doing? Down, 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 down. It's like, you're not going back up. This is not going to be a trend reversal. Okay? All right? So that's critical. That is critical to get that point. That's why, because even though it failed the EMA 50, it's coming down, coming down, coming down, but it's not really going down well below the zero line. It is over here. We'll get to that in a minute, okay? But but that means it's still got legs to go up because it's still near the zero line. The rate of decline is not that steep. It's kind of flattish. That means it's just back testing, and then it's going to go boom up again. Okay? That's how to interpret that. All right? Now, let's go ahead and I'm going to go to the top of this and go from there. Okay. Now, okay, hold on, let me rewind just a touch, So, okay, yeah, here's the top. There's the top. Now, this one, the top. This one is a little bit trickier in identifying, wow, you know, it's been on a nice run. It has been on a nice run. Um, let me go back a little bit even more. Right? It's been on a nice big run. And okay, I see it now. Right here. See this? That's bearish divergence. This is a higher high, right? That point is higher than that point up here. That is higher than that. That is lower than that. RSI is getting weak. RSI is telling you, hey, you might want to get out. You might want to get out. I mean, you've got how many hours? 65 minutes. So it's, you know, 1, 2, 3, 4 hours goes by. But yeah, towards close, right towards the closing bell, you're like, ooh, with like 15 minutes to go, I'm looking at the RSI. With 15 minutes to go before closing bell, you're way below that. Like, uh-oh, I think I'm gonna get out. We need to think about getting out. Okay, that's how you could use the RSI bearish divergences. Even though the MACD doesn't quite tell you that, it doesn't. The MACD shows you positive convergence, but the RSI is showing you bearish divergence, if that makes sense. Okay? So, yeah, that's how you get. That's why I wanted to rewind a little bit. I wanted to show you how can I tell it's topping. You're starting to see bearish divergences in either RSI or the MACD or both. If both of them tell you that you need to get out, you have all systems clear to get out. Okay? All right. Let's keep on going here. Now, so you got out here, you know, yeah, look at that. This this is some crazy wild swings now, honestly. So you got out, look at the MACD going down. I would honestly, boy, in this scenario, so yeah, huge move down. You got out already. You know, do you bite down? Ah, if you're more conservative, I would have waited on the 65-minute, wait for the back test. It's a huge move up. You're like, oh, we're back, right? Oh, here we go. But on the back test, guess what? Failed. I do not consider that a pass. You start seeing candles straddling that. Okay, see now on, Yeah, even the 95 minute, 195 minute, I'm sorry, 195 minute is half a day, 3 hours and 15 minutes exactly. Even the 195-minute candle is straddling. Oh, sorry, that I'm looking at the resistance line. It actually wicked above the EMA 50. Sorry, but here it's straddling. It's straddling. So that's giving you a warning. That's always a warning sign, guys. When the candle bodies straddle, that is a warning sign, period. No exceptions. It is a warning sign, warning sign, warning sign. I've seen it time and time again every day throughout the day. It's like, that's not good. This is not good. And what happens? It tries to come up, 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 up. This to me, this is in pre-markets, right? Extended hours. This is the market makers cheating. This is the market maker pumping, only to rip the cord on you. Boom, 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 boom. See that? But the warning sign was already there, right here. The warning sign was there. I've seen this so many times. So I want you guys to just beat that into your head. The candle body cannot straddle the EMA 50. It doesn't matter what time frame you're talking about, especially on the 5 minute that I like to look at during the trading day. If it straddles that, oh, nope, that's it. I've only seen one exception, that straddling it is okay on the EMA 50. And this is on the 5 minute chart, by the way, not the 65 minute that you're looking at. When it's clear the market is trying to form a big wedge during the day, you know how it could take like 2 hours to create the wedge. Here's the top of the wedge. Here's the bottom of the wedge. Here we're going to the top of the wedge, bottom of the wedge, top of the wedge, bottom of the wedge, forming that wedge. That happens to coincide with the EMA 50. Then I can see multiple candle bodies straddling, 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 right, as it's forming that wedge. Okay, then I'll look to other indicators like the MACD, the RSI. I'm like, are you getting stronger or weaker as you're forming this wedge, right? Like, is this going to go up or down, right? Because that's what we all want to know. We've seen those wedge showdowns every now and then. Like, I've seen the VIX forming a wedge at the same time. TQQQ is forming a wedge. So you're like, oh boy, here we go. Okay, so that's what I wanted to show on that. Warning sign, and guess what? Massive failure. So if anything, you could play puts, swing trade puts. It's like, oh, I'm gonna wait for this to go up, and then I'm gonna short it because guess what? Now you're starting to see weaker MACD, right? Right here. That's higher than that. I might think about shorting this bad boy. Okay. All right. So, yes. So that's basically what I wanted to show you. Because I want to move on to setting trend lines. Okay. Um, if you definitely have any questions, well, now that I'm just looking at this as I'm talking. Yeah, this is a good one. It's coming up, coming up, coming up, failing the back test, but making a higher low than this. Same with the MACD. Up, 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 up. Fail, 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 fail. This is when Jerome Powell put the brakes on everybody and said, "Hey, so not only are we not going to pause, the terminal interest rate is actually higher." That's what that's what sent the markets straight down that day. But see, everyone was like, "Oh, we're gonna crash, right? Gloom and doom." All the while, the MACD was making higher lows, and so was the price. And this is the bottom. This is the double bottom I'm referring to, by the way. I won't rewind, but if you go back to 1013, this is it. This is the same level. But what happens? Look at that higher low. Look at the higher low on the MACD. Close to zero. Close, very close to zero. Kaboom. Okay. This is, by the way, when CPI came in cool, cool, cool. That really got the markets rallying. Huge surge. Huge surge. Okay, but look at that. I contend, and I've said it in previous videos, the markets knew that CPI number was going to be cool. It knew it. It already knew it. That's why it was such a higher low. near the zero line compared to its starting point down here. It already knew the number, guys. They already knew. Because I can go back and show you time and time again. Just like if I rewind back to the see this pattern here? Down, 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 but it's flattening out, close to the zero line. That same pattern. Well, it's going up, 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 close to the zero line, explode. This is 1013. Markets already knew, guys. Markets was already positioning itself, the MACD, close to the zero line so that it could take off. Okay? It already knew. It already knew the answer. So here we are. Here we are through today. See that? Boom, take off, and up here. Okay? And we're holding serve. And guess what? As of Friday, the 18th, higher low. So it had to come up here. It came up, 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 up. Back test to rest, 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 rest. By the way, this is a rising channel. I did another video yesterday on that, so go check that out. This is a rising channel. That's what it was carving out all along, guys. It's carving out a rising channel. Here's the bottom of the channel right here. Here's the bottom of the channel. Making a higher low so far. See that? There's MACD. Higher low. Da da da. Ta da. Okay? Okay. Now let's just jump into the how I draw trend lines. This is March 2020. We all know happened. We all know what happened in March 2020 when the markets crashed, okay? I don't need to explain why or what happened. We all know. You see this red line right there? I just want to call your attention to it. Here are the contact points. Okay, you see this here right here? You see that wick right here? Okay, that's a contact point. This is a kind of a consolidation back test point. You'll see the bottom of this candle body right here. That touches that red line. You'll see this wick right here touching the red line. Consolidation point. This is trying to come up, but it's failing the back test right here. Here's another wick touching the red line. Here's another candle body bottom touching the red line, right? You see all these contact points, okay? So this is the daily chart back in 2020 when the markets crashed in March-ish, right? Okay, good. That's not under dispute. Let's check this out. Let's check this out. What do we have? What do we have over here? That same red line is the June 16th low for 2022, guys. Right there. That is the same red line. So the moral of the story is just go back 2 years and and to where or whatever, however far back the current market level is equivalent to right now, and start drawing trend lines from 2 years ago, and you will be able to easily predict where the market's trend lines should be today. So whatever trend lines that the markets are drawing today or last Friday's trade, as of yesterday's trade, is meant for the future. Okay? But you don't have to spend too much time trying to figure out, well, what are my trend lines? Well, just go back 2 years and just see the contact points. And there you have it. Okay? I promise you, it all works out. I'll just conclude on the trend lines discussion that where the trend line, I'm sorry, I keep saying trend line, support or resistance line, where those lines converge with the EMA and SMA lines, ooh, that's a critical juncture point. That is important. Okay? Anytime you see the convergence of those lines, support resistance plus EMA plus SMA, important. Important. Pay attention. Okay? That is a huge pivot point. Okay? Huge, huge, huge. Okay. So, I want to conclude with this. See, look at the daily. This is the TQQQ. Hold on, let me go to today. I'm sorry. Okay, swing traders, look at this. Notch, higher low, notch, higher low. Nah, it brings us to today, guys. We are technically above the zero line at zero MACD 0.21. We are technically in the positive now, guys. As of Friday, last trading day, November 18th. That is undeniable. It was making higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. That's why I'm thinking, ooh, we're in for a multi-day run, guys. I mean, it could maybe kind of flatten out a little bit, but we'll see. We just need to see. Look at the RSI. Higher lows, higher lows, higher lows. Look at the RSI where it stopped on Friday, right there, right smack in the middle, flattening out. Uh, it's positioning itself to go up. This is not positioning. This is not indicative of going down at this time, right? Okay, so that's the daily. Let's check out the weekly. Look at that. Up, 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 down, down, down. This is for August through September. But look now, starting to curl back up. Higher lows is starting to curl back up. And I think it needs that boost up to just get the MACD to keep going up, keep getting back towards zero. Okay. But ultimately, I think in December the Fed is going to throw cold water on everything, and I think we are going to go back down. Here's why. Here's the monthly. Look at the MACD on the monthly. It's still firmly heading down towards the negative, and it's well below zero. We are on the upswing. Okay, so it's always going to go down, up, down, up, but then it's got to make the next back test down, guys. It has to. That's just the nature of the way it works. And I think that back test is going to come in December. But for the rest of November, I think we got a little bit more because evidenced by look at these big wicks up, big buying pressure up, and big buying pressure up in October. See that? Big green wicks. Green, green, up, up. It's going to try to push up a little bit more for the next few days until the Fed comes out in, I think it's mid December, their interest rate decision, and Jay Powell starts getting on the mic again, then I think it's all going to come down. Okay? So that is all I've got for you guys today. I hope you liked the presentation. Thank you very much, and I'll talk to you again.